Hi everyone, this is Eric from Traders Helping Traders with this week's Tricks of the Trade. This week I want to elaborate a little bit on a subject that we touched on last week, which was identifying the most important support and resistance areas. This is pretty much an ongoing struggle for support and resistance traders, and it's an important concept to wrap your brain around. There's a couple of things that you want to pay attention to when you're analyzing support and resistance lines. First off, perhaps the most important factor that will attribute strength to a support and resistance area is how many times that support and resistance area has been visited. How active is that price? And then you also have to take into consideration things like whether the market is trading at a contract high or at a contract low, whether the markets are making swing highs, swing lows, whether the market has been channeling. All these types of things help determine the strength of a support and resistance area. Let's take a look at the September Canadian dollar. And we'll just take a look at a few things that have been going on here. We had the Canadian dollar. I want to draw your attention to a couple of things. First off, we had the Canadian dollar visit this line of support near 92, 93 several times. You can see I've minimized the chart here a little bit so that we can actually go back about a year. And you can see how many times the market has hit 93 only to be turned around and head higher. And back here in February when it hit 93, it made a real substantial move to the upside, came down from there, hit 93, bounced hard, hit 93 again, bounced up again, and even though this line came up short, you could make the argument that 93.73 was close enough and that this is really a reaction to the support at 93, which is exactly what it is. We had a similar circumstance on the upside where the market reacted, it looks like, to this resistance around 97.75, give or take a little. We had a reaction here. The market bounced down, hit 93, came back up, bounced down, traded through it, actually found support off of it, and I'm going to talk about that in a little bit. Traded marginally higher before falling off again, came up, hit it, reacted, came up, hit it, reacted again, and here we are trading very close to it again. Well, of course, if the market has reacted this many times to the 97, 75, 98 region, it's only logical to assume that once it gets up here again, it will want to react once more. Bear in mind that these numbers are not carved in stone. You can see that occasionally the market will actually fudge these lines before making a reaction, which is why I prefer to wait for a reaction or to trail an entry stop rather than actually try to sell on a limit or buy on a limit, because sometimes, well, as in this instance here, the market will slide right through. Now, what made 98 strong enough to hold the market down after the market actually broke through 98? Well, another contributing factor that adds some strength to support and resistance areas is when the market channels or trades sideways. And that's kind of what we had happen here with the market when it kind of got pinched. It's not a small trading range by any stretch, but prices kind of got confined. It looks between 98 and say 150. The fact that the market traded in congestion, traded sideways, shows us some strength that is in that support and resistance area. So keep an eye out for trading ranges and trading channels. We saw this happen in canola, and I'll flip to the canola chart in just a minute, where the market was trading in a long-term sideways channel for a considerable amount of time. And then we finally ended up buying it higher. Okay, so there are a couple of clues to look for. Now I want to focus on perhaps the most important thing, and that is to try to determine where the buying and where the selling comes into the market, because that's going to add a lot of strength to whatever support and resistance area you are considering. Take a look here again at the Canadian dollar, and perhaps I'll have to flip over to another chart because this one is pretty well stuck at 93 and 98. But you can see that this here is where the buying came into the market. The buying did not come in here, even though we saw support here. This is where the buying came into the market. How do I know that? Because that's where the initial rally took off. And perhaps more importantly, the secondary rally took off from. Now, once again, it didn't hit 93. It only got as low as 93.65. But the point is, we have an area to watch so that the next time the market comes down here and shows us support, which remember is our red-green bar combination, we can say, aha, here is support coming off of a very familiar and strong support area. And we know it's strong because this is where the buying initiated from. Now this red-green bar combination was too large to take advantage of, but look at the following ones. We had a small one here, and we had a nice tight one here, and we had a really tight one here. All of them hovering at or near 93. And these are the kinds of things that you should be, your eye should be trained to be noticing. Same thing on the short side. Okay, we know that there's going to be support or resistance very likely occurring near 98. So the market trades up. It trades up hard through 93. Look at her go. And all of a sudden she starts to slow. And guess where it starts to slow? 97.75, 98. So what are we on the lookout for now? We are looking for resistance to take over and to send the market lower. Now you can wait for the confirmation of resistance, which in this case, well, it still left you ample room to sell the market short, or you could have trailed a stop as you notice the market starting to slow. And how do we know the market is slowing? Just by the sheer size of the bars. Big bar, medium bar, small bar, small bar, small bar. The market is slowing. It's just like throwing a ball in the air. It takes off and then it starts to slow, it tops out, and then down she comes. Same thing here. Look once again what happened off of 93. Look at the buying momentum. This is how you read a chart. These are clear indications that there are buyers down here at 93. And look at what happens. It gets back up to 98. What's happening to the buyers? The buying is evaporating. It gets up here to 98, and the sellers all of a sudden take over. That red bar, that would have been a huge sell signal because you've got resistance right where you're expecting resistance. And then it fell down, a little bit of a rally, but look at what happened here. The rally couldn't take off. The sellers who missed selling at 98 because they weren't as smart as we are. I'm joking, of course. But the sellers who missed selling at 98 are all of a sudden saying, hey, wait a minute. It's back up here to 97. Let's not miss this opportunity. So they hop all over the market at 97. And how do we know? By the size of this red bar. Push the market down, comes back up, doesn't get to 98. It's back up here to 97, 97.25. The market jumps all over it again. Okay, well now we've got some buying coming in a little bit early. So the buyers are getting a little anxious, or the sellers are getting a little bit more cautious. How do we know which side is winning? Well, really we don't until the market gets back up here to 98. And guess what? When it gets to 98, I'll be looking for resistance and perhaps another chance to sell. And that's how you do your support and resistance trading. Find the lines that you think will have the most influence. Look for lines that have had multiple reactions to them, that are showing particular price sensitivity. Lines that are on contract highs, contract lows. Lines that have been formed by channel or channeling prices. And then, last but not least, prices or lines that are showing price momentum, where there is active buying and selling coming off of those particular price points. Okay, just a quick look at the canola chart I mentioned. Okay, this is actually a weekly canola chart, and you can do this exact same stuff on weekly or monthly charts as well. Here canola has been channeling for the better part of a year. And look at the price sensitivity down here around the 35.30 line. How do we know there's price sensitivity there? Well, look, we had support, and what happened after support came in? The market shot up, came back down, bounced again, came back down, hit it, couldn't get through. Yes, we were not trading at 35.30, but every time the market got closer to 35.30, that was that much more reason to get more bullish on the market. So what happened from here then? Well, the market just kept hovering around there. So were we looking to sell? No, of course not. We know there's strong support down here, so we're going to look to buy. And we had to wait a while for this trade, but it finally took off. And look at her go after that. The market just skyrocketed. So where's it going to go to from here now, you say? Well, let's look at where the active selling came in. Well, we know we have reactionary resistance right here. The closer the market gets to 48.25, the more selling pressure will come into this market. Could the market reverse from here where it is now? Of course it could. You can see that we had active selling come in here and active selling come in here. But is this line at 45.01 as strong as the line at 48.25? No, it's not. Will we get a reaction here? Very likely. But it's hard to say how low the market will go from here. The market may tick lower a little bit, and you may find it worthwhile to try that trade, but keep a tight profit target or manage your stops very tightly because it may reverse on you. But once the market gets up here to 48.25, that would be a much stronger sell signal once we find resistance there. So look for these factors in your charts as you're trading. And it doesn't take a lot of practice, and your eye will develop a way of seeing these things in the charts. And of course, if you have any questions, don't hesitate to give me a shout, drop me an email, and I will be happy to do my best to clarify things for you. But that's how you read a support and resistance chart, and that's this week's trivia.